Hello and welcome to another update video about ADA. We start with the bearish wave count. Market is behaving sort of as expected. We came into the green area here. We reversed out of it to the upside. Upside is at the moment expected from here because we talked in the last video about this being either a W, X, Y pattern where we expect some upside before we come down and crash down basically, or as a triangle pattern in wave E where also primarily we expected another move up. This is sort of what I would now primarily expect because here in this move down, this wave C, we already had done our 5 waves, so we were getting towards the end of this 5-wave pattern. So always means be ready for a move up, especially as it was a an ending diagonal. And if you see a sharp move into the other direction after an ending diagonal, it always indicates it's over. Now I would currently primarily expect this to be over, as long as we stay above 46.1 cents. And that means we're continuing to move higher in a wave Y. That should take us to 54.3 cents together with wave E. If we now see weakness in the chart and look at a corrective pattern which might not be capable of exceeding the previous wave B high, then we have to assume that the wave 2 was already in here, that we're already in the wave 3, and we just have a little bit of a retracement and will come down. And again, for that, please look at the fib level that I gave you, which is here the 46.1 cent level. So that should summarize the bearish scenario just very briefly here. So very important to understand, primarily upside expected until we go back below 46.1 cents, and then we would have to assume that we're actually already in the wave 3 to the downside to make lower lows. Bullish scenario here, short term, same wave pattern. That is what was so good with the ADA chart. In both scenarios we expected downside. Now in both scenarios we expect upside, and that's where we currently are. Also here reverse to the upside. Here we would be in a wave 3 now. So if we now see an impulsive wave pattern evolving, we could be more certain that we're in the bullish count. We won't really be let's say sure or certain that we're in the bullish count until we break above that resistance zone here, getting above the 55.8 cent level. Important to understand that the Basel hard fork is approaching, so we could see a little bit of a more crazy rally here potentially. What I think about these things, not much really. That's why I always say, focus on the waves, don't focus on the headlines or the news. It is just a possibility that we could see this happen. So if we are now getting into a little bit more bullish sentiment with a little bit of a rally, either in the bullish case or in the bearish case here, then this could exceed what you would normally expect in such a wave. Just be aware of that. But other than that, I don't have too much confidence in the bullish count. It is still possible. It's still likely above 42 cents, but it's just been trailing sideways for too long. And we have two bearish counts. We have that triangle and the WXY. And here, really it needs to do a lot to do a lot of work to convince me that we are in the bullish count really, because even in the bearish count we expect, like, what did we say, 54.3 cents. So we would need to move substantially above that to be more certain that we're in the bullish count. So it doesn't matter, at the moment they all move together, so that's what I would primarily expect. Also here in the bullish count, I would expect upside now until we get below the 46.1 cent level, the 78.6% fib level. If we go below this, yes, we can go lower in a wave 5, continue to do so, but we are basically limited by the 42.8 cent level. If we go below this, I would also say the bullish scenario is very, very unlikely and would only focus on the bearish count. And that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, subscribe, and if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.